Let me start with something that most trading influencers will never say out loud. If day trading were easy, everyone would be rich. But they're not. In fact, over 90% of day traders lose money. Not once, consistently. And yet, every year, millions of people open trading accounts thinking they've found a shortcut. Because somewhere between TikTok clips, YouTube thumbnails, and screenshots of $50,000 one-day gains, it starts to feel simple. Wake up, click buy, click sell, make rent in 30 minutes. So today, we're stripping all of that away. No hype, no Lamborghini, no secret liquidity hack, no Discord upsell, just what day trading actually is, how it works, why most fail, and what the professionals are really doing. Let's begin. What day trading actually is. Day trading is simple in definition. You buy and sell financial instruments, stocks, options, futures, crypto, within the same trading day. You're not investing. You're not holding long-term. You're trying to capture short-term price movement. Minutes, hours, sometimes seconds. You are betting on volatility. That's it. Day trading is not about companies. It's about price movement. You don't care if a company will dominate AI in 5 years. You care if the price moves 2% in the next hour. That's a completely different game. The core illusion. Most beginners believe day trading is about prediction. It's not. It's about probability. There is no such thing as a guaranteed setup. There is no 100% strategy. There is no institutions hunting your stop loss. Markets move because of order flow, buying and selling pressure, not because a billionaire hedge fund is watching your $300 trade. What actually moves markets are large flows of capital. Institutions, funds, algorithms, macro news, liquidity events. Retail traders are not moving Apple stock. You are riding waves created by larger forces. If you don't understand that, you're gambling. The game you're actually playing. Day trading is a zero-sum environment at short time frames. If you buy and sell within minutes, your gain is someone else's loss. After fees and spreads, it's actually negative sum for retail traders. That's why most lose. They overtrade, they overleverage, they chase momentum, they panic sell, they revenge trade. Day trading is not charts, it's about behavior, and the market is designed to punish emotional behavior. Liquidity, the real concept, not the TikTok version. Liquidity simply means the availability of buyers and sellers at a given price. When price approaches a recent high or low, many traders cluster orders there, stop losses, breakout entries, profit targets. That creates pools of liquidity. When price moves into those areas, volatility increases because many orders trigger simultaneously. This is not institutions manipulating you. This is mechanics. If a lot of people place stops under a recent low and price touches that level, those stop orders become market sell orders. That accelerates movement. Understanding liquidity is understanding where volatility is likely, not predicting direction with certainty. Why 90% lose? There are 4 main reasons. First, they risk too much per trade. Second, they don't have a statistical edge. Third, they overtrade. Fourth, they can't control psychology. Day trading magnifies emotion. When your position moves against you in seconds, your brain goes into fight or flight. Loss aversion kicks in. You move stops. You average down. You hope. Professionals don't hope. They execute predefined risk. The only thing that matters is risk management. Here's the boring truth. The edge in day trading is not the setup. It's risk management. Professionals think in probabilities. If your strategy wins 55% of the time and your average win is larger than your average loss, you have a positive expectancy. That's math, not prediction. If you risk 1% of your account per trade, you can survive losing streaks. If you risk 10% per trade, a bad week destroys you. Most beginners are not undercapitalized. They are over-leveraged. What professionals actually do, they trade liquid markets, they focus on volatility windows, they define entry, stop, and target before entering, they accept small losses quickly, they scale winners, and they trade less than you think. Day traders do not trade all day, they wait. And that's why most fail, because waiting is boring, and boredom creates bad trades. The strategy myth. There is no magic pattern. Breakouts, pullbacks, range reversals, news plays, VWAP strategies, momentum scalping. They all work sometimes, they all fail sometimes. The difference is execution consistency and statistical testing. If you haven't backtested a strategy across hundreds of trades, you don't have a system, you have hope. The real cost nobody mentions: slippage, spread, commission, mental fatigue, opportunity cost. If you trade frequently, fees add up. If you stare at charts all day, cognitive fatigue builds. Day trading is mentally expensive. Even if you're profitable, the psychological cost is high. Can you make money? Yes, but here's the realistic picture. You need capital, discipline, statistical edge, emotional control, time, data analysis, and most importantly, you must treat it like a business. Track trades, track win rate, track risk-reward, review mistakes. If you treat it like a casino, it will treat you like a gambler. The honest probability. Only a small percentage make consistent income from day trading. Even fewer sustain it long-term. Why? Because markets evolve, volatility shifts, edges decay. What works this year might not work next year. This is a performance game, not passive income. The real question: should you day trade? That depends. If you want fast money, excitement, adrenaline, you'll probably lose. If you want structured risk, data-driven execution, process discipline, and accept that some months will be flat or red, then it becomes possible. But it is not easy money. It is controlled probability under pressure. Final reality check. Day trading is not financial freedom. It is high-skill speculation. It can generate income. It can destroy capital. It amplifies your psychology. If you cannot manage emotion, you cannot manage risk. If you cannot manage risk, you cannot survive. Most people are not beaten by the market. They are beaten by themselves. That's day trading. No BS, no Lamborghini, no secret algorithm. Just probability, risk, and human behavior under pressure.